Hello, everyone. My guest today is Chris Cabrera. He's the CEO of Xactly Corporation. He's a seasoned executive with more than 2 decades of successful senior management experience in both early stage and public companies. He's a noted industry expert in issues relating to sales performance management, sales compensation, commission, employee engagement, incentive compensation, benchmarking, big data, and SaaS delivery models. Chris, are you ready to take us to the top?
I am.
All right, man.
Great to be here.
You bet. So tell us more about Xactly, and then I want to understand how you got involved with the company. It sounds like you might have come in later after the founder. So tell us what the company does first, and then we'll get into the other stuff later.
Yeah, I'm actually the founder. So I started the company right from the get-go. Yeah.
Okay. And so what does it do?
So Xactly is in the sales performance management space. So when you think about every company you've ever worked for or sold to, there's people in the company that sell their wares, whether it be services or widgets or whatever it might be, and they pay those people commission. And the vast majority of the world today is doing it on Excel. And Xactly was created to create software to help drive the millions and millions of dollars that people pay and use to pay compensation out to get those reps to sell more stuff or discount less or sell fries with a shake, whatever the case might be.
So, Chris, is this more of a management platform for the X's and O's or an actual gamified kind of system to increase performance?
Well, it's both. So, you can imagine if you're a company and you're paying out millions of dollars, and just to give you a sense, a small company that's paying 200 salespeople, you might be talking about a $20 million cost center for commission. So it's a big dollar amount. So management needs all kinds of reporting to understand how those dollars are being used, how effectively they're being used. Clearly, you have the whole dangling carrot, notion. So the idea that today's modern day dangling carrot is the cell phone, right? And so the idea that you can dangle that in front of the rep in real time every day to get them to sell more stuff, that there's really a behavioral component to this. And for the salespeople themselves, the ability to log into Salesforce.com and be seeing the deal they're working on and have a little button that says, if I sell this deal, this is how much commission I'm going to earn.
Yeah.
You can begin to think about the ways that you can drive behavior. And so it's a behavioral tool. It's a management tool. It covers all the boxes.
And pure SaaS model?
100% SaaS.
Interesting. Okay, so without going down every different customer cohort, on average, what's the customer paying you per month?
On average, it's about $30 per rep per month.
Oh, good. Okay, so even a new sales team starting out could really get cranked up on you guys.
Absolutely. We've got 1,400 customers. Our customers include companies that have 15, 20 reps, all the way up to 15,000 or more reps.
Would you say the average is probably around 30 reps, something like that?
No, I'd say the average is closer to 400 or 500.
Oh, wow. Okay, so you have a long tail of users, but it sounds like you have maybe 80% of your revenue is made up by teams larger than 100 paying you.
Definitely, yeah.
Interesting.
Yeah, because we do a lot of big companies, LinkedIn, Salesforce.com. These companies pay 100% of their sales forces using our tool, and many others. These are huge. It's a very horizontal app because when you think about comp, we pay Hyatt, for example. If you walk into a Hyatt anywhere in the world to plan your wedding, those wedding planners are paid through Xactly. We pay bank tellers where you walk in to make a deposit. They get you to walk 10 feet to a loan agent and they get a spiff. We pay thousands of people in Australia at the Australia Post Office because they hang a shingle that says, we sell and collect stamps and, collect mail. And to us, that looks kind of like a sales rep. So it's very, very broad-based app.
So with 1,400 logos paying you and 400 reps per logo on average, I think that comes out to 560,000 seats, something like that. And at $30 a month, that puts your revenue like $16.8 million a month. Is that accurate?
You're in the right ballpark. Yeah. We were recently public. We took the company public in 2015. We then sold it to Vista about 7-8 months ago. And, we were, north of $100 million at that time.
Yeah.
We don't talk about the revenue now as a private company again, but
that was 2016. Sorry. When did you sell to Vista?
We sold to Vista in 2017, in July of 2017.
Okay. Got it. And you were north of 100 at that point. By the way, was it a 7.2x valuation, a multiple on ARR?
I don't know the exact multiple, but we did fine. We were happy.
It's so funny when you look at the Cvent deal, when you look at some of their other deals they've done, it's for whatever reason, it's always a 7.2x ARR multiple. I don't know if it's intentional or if it's just as totally random and out of the blue.
I actually hadn't heard that.
So I want to walk backwards here for a second. So what year did you launch the company in?
We founded the company March 1st of 2005.
Okay, 2005. And take me up to 2015. What were you doing in terms of revenue right before you decided to IPO?
Oh boy, we were probably in the high 60s, 70s. We were a small IPO for that time period.
And what did you raise on day one?
I think we raised about 60 million, and after all the bankers got their money, and they're well-deserved, I think we took home maybe 50, 55 million, somewhere in that range.
Okay, and prior to that, had you raised capital, and if so, how much?
Oh yeah, so we had raised 86 million prior to, I founded the company on 800 grand of angel money, and then we did an A round that year of 4 million. And then just about every year in those early years, we were raising money. So we raised 4, then we raised 8, then we raised 12. And then the rounds got bigger a couple of years after that. But all in all, 86 million puts us on the low end these days. I mean, people are raising hundreds of millions of dollars, and they're no bigger than us. It's kind of surprising, a little bit scary.
It is scary. There's a way, I mean, we've had these folks on the show that have raised 200, 250 million. It's unbelievable. Way small, by the way, sometimes not even as big as you were in 2015. So just to summarize, you launch in 05, you grow to about 60 million in 2015. Over that time period, you raise about 86 million bucks. You raise net after banker fees about 50 million on day one. Did you hit kind of the market cap you were expecting, the share price you were expecting on day one? And if so, how'd you manage that?
No, we didn't. I really wanted a $12 coming out price, and
which would have given you what valuation, what market cap?
Oh gosh, I don't even remember the numbers anymore, but probably 500 million, something like that. Yeah. I think if you've ever taken a company public, you're really beholden to the whims of what's happening during that 2-week period that you go public. And it wasn't the best week. We had, I don't remember all the details, but, as we were flying around on the jet, meeting all these people, there was maybe, 7 or 8 other IPOs during that same time frame. And I think 3 of them ended up pulling and not even going public.
Wow.
So it was a tough.
So what was your day one share price?
So we went out at $8.
Okay. Not horrible though.
No.
Yeah.
It was good. I mean, I think, again, not having been through it, and you're the CEO and this is your baby, you founded it, I can remember having a moment there of like, Jesus, did I do the wrong thing here? But in hindsight, it was absolutely the right thing. It was great for our investors. Everybody, bought in at 8, sold at pretty much 16. So everyone doubled their money. And
what do you mean bought in at 8 and sold at 16? That's what the share prices went up to?
That's what we sold to Vista for. It's all public. Yeah. So, everyone did very well, and I had a lot of really happy investors. And of course, the people that, invested in the early rounds were buying at pennies, relatively speaking. And so, a lot of people made a lot of money, and it was a great, wonderful experience.
So 2015, you're now public, you're dealing, your day-to-day looks way more administrative than it used to. 2016, you're growing. 2017, I imagine in 2016, maybe conversation with Vista started. Why decide to go private, and explain the mechanics of that to me in terms of your shareholders and your board?
Well, there's a lot of reasons to go public, and, some of them are good and some of them maybe not so good. I think for me, it was a bucket list item. As a founder, I wanted to do it, and nobody could talk me out of that. So, many CEOs, I would talk to would say, Chris, are you sure you want to do this? It's a nightmare. It's a pain in the ass. You're going to be living and breathing on Wall Street. And, I kind of didn't really, I just tuned that out because I just was convinced I wanted to do it. So that was a big part of it. The second big part of it was, here in the Valley and doing all the VC rounds. And even though we hadn't raised tons and tons of money, we certainly had a pretty big overhang of preference, stock preference that the VCs would get off the top of an acquisition. And that always
did that carry through from your early VCs pre-IPO, that carried through even when you were public?
No. My point is, the reason to go public was to eliminate that.
Oh, got it.
Because everybody goes to common, and we're all now on the same.
No liquidation preferences, no ratchet clauses, no nothing.
Everything goes away. And so to me, that was a very important thing for a lot of reasons. I mean, I just felt like I never liked the concept of preference. I always felt like it was an unfair, sort of thing. And I wanted to level the playing field and have us all be common. And so those are, obviously primary reasons to go. Clearly, raising the 55 million was a very important reason to go, and it helped us grow the company and build it. And so anyway, those are the reasons to go public. The reasons to go private were more to do with,
By the way, Chris, sorry, how old were you when you took the company public?
Oh boy, I was 37 when I started it. Well, we're
47.
51 right now. So I was,
47,
49,
49,
somewhere in that range. Yeah.
Okay, so sorry, keep going. Reasons to go private.
Yeah. So, what we were experienced as a public company, we were public for 8 quarters. We made our numbers every quarter, but it was tough. And, you're definitely focusing on a very quarterly cadence. And, everyone says that, and we all know that. But I think what was really evident to me was size matters as a public company. And, the bigger you are, the more you can smooth out the bumps. And the things that Wall Street doesn't behave well around is bumps. And you're going to have bumps in every business. And so this is where size becomes difficult. And we generally compete right now with SAP and IBM, right?
Yep.
So we're competing with the big boys. And, that makes it difficult because we wanted to do some acquisitions. We wanted to grow in different parts of the world. We wanted to come out with some new products. All those things were very, very difficult to accomplish as a relatively small public company. And I felt like, we were kind of operating with one hand tied behind our backs. And I thought, when I met the Vista folks, it was almost too good to be true because I wasn't selling the company, right? I was really getting a whole new set of investors. I was still going to run the company. The management team that wanted to stay was going to stay. But it gave us kind of a rich uncle that was going to allow us to go do acquisitions and do these things. And in 7 months, we've already done 2 acquisitions, which is precisely my point. Those would have been very difficult to do as a relatively small.
It'd be hard to also explain those in public markets if they're longer term acquisitions, right?
That's right. I mean, it's a whole different mode of thinking. Vista's not thinking quarter to quarter. They don't even want to talk to me. When I talk to them about how you're doing this quarter, everything is about building the foundation for the future and building the right type of company. And that was music to my ears.
Yep. How did it happen? Did they reach out to you or were you reached out to them?
Oh, we had been talking and
First touch First touch
was probably a year prior, and then didn't hear a thing from them.
Did they reach out to you? Like, were they hunting? They were looking for a deal. They reached out to you?
I think we were introduced by a mutual company, and one thing I've learned about Vista is these guys are super, super sharp, and they have tentacles everywhere. And so there's not many deals that go down that they don't know about.
Yep.
And people would be stupid not to bring it to them, right? Because of the kind of company they are. So anyway, we had an initial conversation, and I didn't know much about them. And as I learned more and more, I became more and more interested. And then we got to running the company and doing our thing. And the deal actually came together very fast once we re-engaged. I don't remember the exact time frames, but it was a matter of weeks, really. It came together.
That's great. Yeah. And so you said you're doing over north of 100 when you went private. Obviously that information is public. We can just look at your last earnings call, and the price I think was 564, right? Essentially that's what they paid total.
Yeah.
So call it 4 or 5, maybe 6x multiple there. Now you mentioned one of the reasons you did this is to make acquisitions. Tell me quickly, because we're running out of time, but quickly, when you look at new acquisitions to make, what do you like to buy?
Well, we like to buy things that grow our footprint, so that are additive to the product base. And so the 2 that we've done, the first one was a LineStar, which was a territory management product, very complementary to the comp space, but something we didn't have. So it's great to be able to now take a new product like that and go sell it back into our 1,400 customer install base, as well as give us something that's a competitive differentiator going forward. That's the first example. The second example was a company called Obero, a Canadian company that we bought last week. And they were doing a great job. They're kind of a competitor in the ICM space, but they really had done some
What's ICM stand for?
Incentive compensation management. So they were much more in our core business, but they have a product, 2 products that we did not have. One was something called ASC 606, which is a standard that all these companies, public and private, need to adopt in the next 12 months. And so we really wanted that technology. and they have sales planning technology, which really was something as an area that we don't have and currently didn't play in. And so those two things were definitely additive. They checked off the box to be able to sell back to our install base and to make us differentiated. So as we go to market with our competitors, we have something that's very different than anybody else.
Yeah. Last question before we wrap up with the famous five. Those pro formas that you guys put together for, the expansion revenue opportunities by cross-selling those products, generally have they panned out, or a big, way higher or way lower?
Well, the second one just happened last week, so it's way too early to tell. The first one, it's been about 7 months. We acquired them the week after we got acquired, and it's been fantastic. It's far exceeded our expectations.
Higher ARPUs, more wallet share per of your 1,200 logos, all that, right?
All that.
Yeah, good stuff. All right, let's wrap up here with the famous five. Number one, Chris, what was the last business book that you read?
Well, it's not the last one, but my favorite business book is Outliers by Malcolm Gladwell. I really believe in the whole tipping point concept. I know he wrote a tipping point book too, but I like Outliers the best. And I believe our market has yet to hit a tipping point. So I just love all that data-driven stuff that he does and that he talks about.
Number two, is there a CEO you're following or studying right now?
I look to a couple different CEOs when I think about that question. I'm a big fan of Mark Benioff's. I love what he's done around philanthropy. We, as a company, adopted the 111 pledge that he created right from the get-go. So we put 1% of our founding shares into a 501c3. So we have now a pretty big 501c3. So I definitely give him kudos for that. I'm incredibly amazed by Elon Musk. I think, what I take from him is he inspires me to think just enormous, like way bigger than I'm nowhere near doing it the way he does it, but it's certainly inspirational. And so those two guys are people I follow. Yeah. Was
Benioff in the bidding process when you decided to go to Vista? And if so, why didn't you sell to Salesforce?
We can't, obviously I can't talk about that, but we're very, very close to Salesforce. They were an investor in the company early. If you read my book on Amazon, Game the Plan, you can read how they were really the people that caused me to leave my previous company to start this company. And Salesforce was our very first customer and is today our longest standing customer.
That's great. All right, number three, what's your favorite online tool for building the business?
Favorite online tool? I'm a big fan of LinkedIn. They're a great customer of ours, and we use it extensively throughout the company.
Number four, Chris, how many hours of sleep do you get every night?
These days, I sleep pretty well. That hasn't always been the case. I'm a big time early riser, so it doesn't really matter what time I go to bed. I'm up at 5 a.m.
How many hours do you get usually, though?
I usually get between 6 and 7.
Okay, that's pretty good. And what's your situation? Married, single, you have kiddos?
I do. I've been married going on 28 years.
Oh, wow.
My beautiful bride, Marla, and I have 2 kids. My daughter works at Alexa works at a Vista company called Navex. She's in sales.
Oh, cool.
Graduated from USC. And I've got a son, Cole, who is a junior in Boulder.
Very cool. And how old are you, Chris?
How old am I? 51.
51. All right, last question. What do you wish your 20-year-old self knew?
If I could go back and talk to myself, when I was 20, I would tell him just stay the course because I'm pretty happy with the way things turned out. I'd probably tell him obviously to buy Apple. But I think probably if anything, I would tell him to spend more time with my parents. I lost my father about 5 years ago, and that was unexpected. And I think you can't spend enough time with your parents as they get older.
He would have spent more time with his parents, but generally stayed the course. Launched Xactly back in 2005. They've now scaled up to over 1,400 customers, using them to manage sales plans, to kind of gamify the solution for reps so that they understand what all the upside is and really keep them motivated. More people hit their quotas, I imagine, if they're using Xactly than if they're not. They have about 400 reps on average per 1,400 of those logos. So call it somewhere in the $16 million per month range, because each seat is about $30. He grew it up to 2015 and up to about $100 million in annual sales before, and raised about $86 million prior to that. Then took it public, raised about $50 million on day one, $8 share price. Grew it for 2 years, and then realized there were serious advantages to being private. Reignited a conversation with Vista, and I'm sure some other folks as well. Ultimately sold to Vista at a great exit price of $16 per share, or $560 million, doing again north of $100 million at that point. So healthy exit. Now focused on acquisitions, a longer term plan, and staying focused on growing the business. Chris, thank you for taking us to the top.
Thanks very much. Good to talk to you.